Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please give me a 5-star rating. It helps support the channel and it doesn't cost you anything. This content is brought to you by Uphold, which is a great platform that makes it very simple to buy, sell, trade, and earn cryptocurrencies. And Uphold has more than cryptocurrencies. They have US equities, they have precious metals such as gold and silver. And guess what? You can trade between any of those assets. That's unique to this platform in a very easy step. You don't even have to convert it to another currency. You can trade between cryptocurrency and gold and silver and whatever it may be, guys. So a very unique platform that's ahead of the curve. And they have 10 plus million users. They are trusted. They have a very easy to use app. I've been using them for years. I still use them to this day because they're one of the only exchanges in the United States that offers XRP to be able to buy, sell, trade. Many other exchanges have delisted XRP due to the SEC Ripple lawsuit. Uphold still has them on there, and they have 200 plus cryptocurrencies, and they're available in 150 countries. And over the years, I've interviewed the founder, the CEO, and many folks who work here. So they are trusted, they are reputable, and once again, I can vouch for this platform because I have been using it, and I've talked about it for years with you guys if you've been subscribed. So if you'd like to learn more about Uphold, please visit the link in the description. Now, let's jump into the big news. And it involves Bakkt, the powerhouse that I've talked about for years, going back to 2018. Well, they have partnered with Sullivan Bank to let banking customers trade crypto. Guys, this is not getting the hype and the coverage that it should be. And I'm going to explain what's happening here. First, let's talk about who is Bakkt. Bakkt is owned by the Intercontinental Exchange, which is the parent company. Yes, the parent company of the New York Stock Exchange. They own it, and they decided to build a crypto platform. So we're not talking about some random small startup here. We're talking about a powerhouse that is looking to dominate crypto. And going back to 2018 and 2019, their plan was to partner with Starbucks. They are partnering with Starbucks and allow you to go into Starbucks with the Bakkt app and buy coffee and all the services and products and so forth. Well, their plans got a bit derailed because the pandemic came along, and also there were some political issues with the wife of the owner of the New York Stock Exchange was she had a lot of political problems and baggage that came with it. And we talked about it over the years. So they kind of pumped their brakes a little bit, slowed down during that period. This was in the Trump era, and they've been building quietly. But guys, look who they're partnered with: Starbucks, Quiznos, Google, MasterCard, and they got tons of capital, tons of resources. Once again, the parent company of the New York Stock Exchange. So what are they doing with Sullivan Bank? Well, they're joining forces to let the bank's customers buy, sell, and hold Bitcoin and Ethereum through the Bakkt Crypto Connect tool. Here's a quote: "We are pleased to work with the Sullivan Bank to offer their customers the option to buy Bitcoin and Ether in their trusted digital banking app," said Bank Chief Marketing Officer Mark Elliott in a Wednesday, August 24th news release. To make the experience seamless for Sullivan Bank and its customers, we provide the full strength of Bakkt's platform, including compliance, tax reporting, educational resources, and customer care. Now, guys, listen to this. This is the key right here. Sullivan Bank Chief Operating Officer Mallory Farrell said in the release, the Bakkt platform will meld cryptocurrency capabilities, here it is, with the bank's existing banking platform, letting customers view their crypto balance as well as their checking and savings balance in one place. Do I need to say more, my friends? What have we been talking about for over the years? Banks, stock exchanges, financial institutions will all adopt crypto. They will integrate it. I've often given the mock scenario of your local bank representative calling you, "Mr. Jones, how are you today? We are now offering cryptocurrency investment. Would you like to use some of your funds to invest in crypto? We will custody it for you. You don't have to worry about anything. It will show up on your next banking statement. My friends, that's what's coming. And it's being built for not just the major banks like Bank of America and JP Morgan. It's being built for smaller local banks, community banks, federal credit unions. I've often talked about NYDIG. NYDIG is doing something similar to what Bakkt is doing here, helping these federal credit unions and small banks to offer crypto trading, custody, and so forth. Guys, the next bull market's going to be insane. And you see what's happening. This is being built in the bear market because we have not hit mass adoption yet. There are still billions of people who are not paying attention, but they will FOMO in because crypto is going to be part of the economy. We're going to see crypto being adopted by every major financial institution. They're going to offer it to these people. They're going to market it to them. So I hope you see what's happening here. And that's why I said this is so important. They're going to integrate crypto straight into the whole checkings and savings balance. And it's all in one place. Guys, do you see what's coming? I know some of you are going to say, hey, I'm not going to go buy crypto from my bank. Who the hell does that? Well, you and I are early adopters. We are more savvy than the majority of people out there. We understand hardware wallets. We understand the wallet addresses and what's happening. We understand how the blockchain works. There's obviously a huge segment of the population. They don't know about that. And guess what? Many of them don't want to know how the sausage is made, right? So to speak. They just want to know, I'll put some money in Bitcoin and that's it. They want to know they can do it with a trusted institution that they've used for 30 to 40 years. Look, I could see my parents doing this. Go to their local bank in their community, and the bank rep says, hey, Mr. Edward, would you like to invest in Bitcoin and blah, blah, blah? And my dad says yes, right? And then they tell him, look, it's going to show up on your statement and we're going to monitor it for you and all that jazz. Guys, do you see what is being built? This is why I'm so bullish on this asset class. And despite all the FUD, I watch what the institutions are doing, not what people are saying. What are they doing? And look at what is happening. Even just, obviously, we've been talking about BlackRock recently, right? The largest wealth manager, they've taken a position. And then you see these smaller banks doing their thing too. Guys, higher prices are coming. Be patient. Dollar cost average, HODL, and be patient, right? Not financial advice. You need to do your own research, of course. So here's another quote. Given the current landscape of the increasing interest in cryptocurrency, Bakkt Crypto Connect offers financial institutions the tools to meet customer demand and provides crypto access to customers without leaving their banking institution. Enough said. I don't think I need to talk about any more in this article, guys. Full integration into banks and federal credit unions is coming. It's starting, as you can see here in the example. Let's move ahead. Crypto ATM firm Bitcoin Depot has reached an $885 million acquisition deal that would take it public. Guys, I don't care if you love, hate, or you're crazy about Bitcoin or you can't stand it. It doesn't matter. The adoption is happening. And once again, similar to the bank analogy I gave, you may not be interested in buying crypto from an ATM, but a large segment of the population will, because they've been using ATMs. They trust it. And once again, don't compare, yourself as an early adopter of the technology to other segments, other demographics of the population, right? Guys, this is another massive piece of news. These companies are looking to go public. They're raising a ridiculous amount of capital, and they are expanding. So the merger between the SPAC, and by the way, if you don't know what an SPAC is, it's a special purpose acquisition company, GSR2 Meteora Acquisition Corp. My goodness, what a name. An Atlanta-based Bitcoin Depot is set to be announced on Thursday, and this is being reported by the Wall Street Journal. and it looks like they're going to go public, and huge acquisition here. So Bitcoin Depot was founded in 2016 and has over 7,000 outlets in the United States and Canada. Bitcoin ATMs are not like fiat ATMs. They do not allow users to withdraw or deposit cash. Instead, they allow users to purchase crypto by scanning a code and using cash. Such crypto ATMs make the emerging digital asset class more available. Furthermore, crypto ATMs are becoming more and more popular every year. In 2019, there were around 6,000 such ATMs. Fast forward to 2022, there are nearly 40,000. Nonetheless, the growth did stall for some time. Well, obviously, right? Like I said, similar to Bakkt, the pandemic happened. Obviously, nobody was going out. There was lockdowns and all those things, but things are moving ahead. So regardless of the current bearish sentiment, Bitcoin Depot reports doing fantastic. The company has reported continued growth despite the market behavior. Bitcoin Depot's CEO Brandon Mintz stated, "We're actually doing fantastic right now, regardless of the market." So growth is happening, investments are happening, these companies are looking to go public. And guess what? This is the tip of the iceberg. More to come. Get ready. You're going to see it. And I can't overemphasize, look at when it's happening. Bear market, when majority of retailers scared, people like, oh no, what's going to happen? Oh no, it's down. It's the end of the world. We got a recession and all that. Yes, that we've had recessions before. Markets go in cycles, boom and bust. In the bust time, when the blood is on the street, that's a time you want to accumulate. This applies to real estate and stocks as well. And then you hodl and you be patient and wait for the bull markets, and then you sell and you make your profit. You don't want to be buying in a bull market at the top. That is when dumb money buys. And I know that statement may it may turn some people off, but that is the way the world works. That's why education and research is so important, so you know what's happening. And that's why I created this channel. Now, here's some interesting news, some block data. They've been putting out some really great data recently about adoption of crypto. And it shows crypto custodians. In 2012, there was one. It was Paxos. In 2022, they are now 73. This includes the world's top 5 custodians by assets under custody. And look, for those of you listening on the podcast, you probably can't see the image, but just a huge growth and big names getting involved, banks and all kinds of different institutions who are now offering crypto custody. You know, like some names are DBS, BNY Mellon, BBVA. You guys may recognize some of those names. And Bakkt is on here. We just talked about them. So huge adoption. You need the custody part, right? Because the funds have to be safe, right? Pretty straightforward. So that's being set up. And what's interesting is that a lot of the legacy financial institutions like banks and stock exchanges are getting involved. Let's talk about the SEC and crypto. Jake Traversky of the Blockchain Association tweeted out something today, which I absolutely agree with. He said the SEC claims to be a cop on the beat for crypto. It should be. But unfortunately, as Jim Chanos points out, they're more archaeologists than detectives. They wait until things go wrong and then show up to dig for details. Case in point, ignoring Celsius, but going after BlockFi. Absolutely. Gary Gensler, and I tweeted about this, is trying to create chaos. He's trying to roadblock crypto and slow it down. He's not trying to kill it now. I want to be clear about that, because he's waiting for his incumbent buddies like your BlackRocks, your Goldman Sachs, your JP Morgan to catch up, to have them put their stake in the ground, grab up as much as they can, just like BlackRock is. Look at when BlackRock entered the market. When things are down, blood on the street, retailers gone, right? So these things are playing out very clearly. These are facts, by the way, right? These things are happening. You just watch how the world works and you'll see these themes and you see the narratives around them. So Jake said, this is not a new problem. The SEC was famously warned about Enron years before it collapsed. That is true, my friends. If you don't know about that, go research it. But did nothing to stop it. Same with Madoff, talking about Bernie Madoff. Same with Theranos. Same with many other frauds and scams reported by whistleblowers. A decent cop on the beat doesn't turn and look away. He says here, no one will deny that bad actors have abused crypto. Of course, there have been scams, guys. When I entered, I remember a BitConnect, and there was all many other scams. So one benefit of crypto is that frauds and scams are much easier to detect than in traditional finance. So we can see when they happen, often in real time. All a cop on the beat has to do is to follow. It looks he tagged here on-chain sleuth Zach XBTT to find the bad guy. So just highlighting an example. And he says, but today's SEC seems mostly interested in harassing upstanding U.S. companies that are trying in good faith to comply with securities laws. It's like a cop on the beat walking past a robbery to give a citation on the corner store for not cleaning the sidewalk. We deserve better. Abso-freaking-lutely. And I've often rambled and complained on this podcast. I can't believe this is where my tax dollars is going. I can't believe this is what the SEC has become. They've lost all integrity. They are bought, and it is a sad situation, as far as government. And hopefully things can get turned around and cleaned up here. And what I love today, guys, Rosalind Layton, she dropped a big article in Forbes. The title of that article is Gary Gensler, Resign. I love it. I love it. Gary was getting trolled on Twitter today because of this article, but it's what we've been talking about. He's got to get out of there. There's so many conflicts. There's so much baggage and hypocrisy and lies and corruption, and once again, not looking out for retail investors, but looking out for incumbents. It's clear as day. It's pathetic, and he needs to get out of there, and we need to get somebody better in place. I hope Congress can act and force the SEC to update the Howey test. I think they will, but it's going slower than we want. But if you haven't read this article, guys, be sure to go check it out. And here, once again, it's on Forbes. Rosalind Layton, great headline, and the Forbes wants me to pay for it, so I can't even read some of it for you. John Deaton went on Fox News today, talked about the SEC Gary Gensler, the overreach of the Howey test, the abuse of the Howey test, and what's happening. I don't want to play the clip. I'm sure many of you saw it, but just heads up that happened. Now, speaking of the SEC, ex-SEC chair Jay Clayton joins crypto investor Electric Capital as an advisor. Funny enough, I've been in contact with the folks at Electric Capital. They raised $1 billion to invest in crypto, my friends, to not only invest in the crypto companies, but to buy the tokens as well. So it's interesting that these guys are getting these jobs, man. I don't like that. I think there needs to be some sort of window where they're not able to work with, companies and places they regulated. But it's interesting that they continue to get these jobs, and they are becoming advisors and getting paid a lot of money. And look, I'm not against making money, but it has to be done in the right way. So it's happening. I'm not going to share much here because it's pretty straightforward that he joined kind of the board as an advisor. And hopefully I can get that interview with the folks at Electric Capital so you can learn more about their strategy. Now, some great news out of Japan. Japan to improve its crypto tax system to prevent the overseas outflow of crypto startups. Wake up, America, right? This is what the United States needs to do. And Japan recognizes if they don't put the right infrastructure and regulation in place, companies are going to leave and go to other markets. And that is more true for crypto companies than any other companies in the history of the world. Why? The blockchain is global. Okay, you're going to give us a hard time? That's okay. We're going to go to another country. But the blockchain will still exist in your country because you can't ban it in your country, and the tokens will still exist. This is what the SEC doesn't get, right? They keep saying, oh, all these cryptocurrencies, all coins are securities. Well, the network, the decentralized network, a lot of these tokens exist on are distributed globally. And that is what they're missing, right? Well, maybe not what they're missing. They get it, but they're trying to maintain that power, right? They want to make sure they can go around, shake down these companies, get as much capital. And like I said, Gary Gensler's mission is to delay the crypto asset class as much as possible, put up roadblocks so his incumbent banking cartel buddies can catch up. So good news out of Japan here. Now, Coinbase, they said they're increasing transparency for new asset listings. And actually, wait, this is an old article. Is this an old one? I thought it was something new, but that they were listing Hedera, HBAR, and so forth. That's actually an old article. Sorry about that, guys. Here, A16Z, which is obviously major hedge fund, they're doing something cool. The maintenance and advancement of open source software is crucial for the crypto community. To increase our support of public goods in Web3, A16Z Crypto is committing $300,000 for open source developers in the next round of Gitcoin grants. So that's cool that these companies are giving out grants to help different entrepreneurs, builders, and so forth, and a good sign that for the growth of the asset class. Excuse me. So they did a full our write-up on this, and I'm trying to get some interviews with the folks at A16Z to talk a bit about their strategy. They have raised billions as well. They have a huge fund to invest in crypto. They were early investors in crypto. They did well with the Coinbase IPO, of course. So big powerhouse there. And by the way, if you don't know who Andreessen Horowitz and Ben, the folks at A16Z are, you got to go read it up. Mark Andreessen, Ben Horowitz, they go back to the internet boom days, the dot-com boom with Netscape. They've been around a long time. They've made some really great investments and done really well. And now they're here in crypto. So I think that's a testament to the potential of this technology. They see it. And I hope you see it as well. And that's why, once again, I want to share the facts with you guys. What is happening? Who's building? Who's investing? Who's raising capital? That is so important to understand the future, the growth, the path towards higher prices. All right, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.